welcome back to the Raw Selection Private Equity Podcast. Joining us today is founder and managing partner of Pacific Avenue Capital, Chris Sznewajs, a private equity firm located out of Los Angeles and operating across Europe, but based in Paris. Interesting private equity conversation, discussion, their work in the portfolio, their work on what they regard as complex transactions, predominantly carve-outs, but also diving into the decision-making around the growth of the private equity firm and the decisions made around whether to go to Europe, how to go to Europe, how to expand geographically, and going in their very niche avatar of the place that they invest in. Let's dive in. Chris, if you could share with us a brief insight into you, please.
Sure. Well, nice to spend some time together, Alex. Maybe I'll just start personally. I am married and I have 4 children. We live in Southern California, which is where my business is, Pacific Avenue Capital Partners, where the vast majority of our team is as well. We've been out here in Southern California for the last 12 years and big 4 boys, so we're very, very big and active into sports, both watching them participate in family and business. That takes up the vast majority of my time.
Perfect. With regards to, for you and the portfolio companies, what are the mistakes that you see either private equity firms or portfolio companies making, and what would you suggest to correct them?
Yeah, so for Pacific Avenue, our model or strategy approach is predicated on a simple concept, which there are individuals and or corporations that own businesses, and they've made a strategic decision not to own them anymore. The term we use is unnatural owner. And as a result of oftentimes businesses being unnatural owners, and obviously as a result motivated to transact, it allows us to step into situations where we see, I wouldn't necessarily call them mistakes, I'd call them a lack of prioritization. And because they're not the right owners, they choose not to own it, they haven't prioritized correctly inside of the business that we're buying. And so I would say the number one thing that we focus on is prioritizing and aligning around the most important things that the business needs to be doing. And oftentimes what we see is, with the best of intentions, businesses are doing a lot of different things. Many of them are not making a difference in terms of creating value. And so first and foremost, let's agree on the 2 or 3 very simple things that we need to get done to create the most amount of value. And then the second thing, and frankly, this happens quite a bit in corporate divestitures or carve-outs, the incentive structure is not aligned correctly. And so you have individuals, team members within the business that we're buying that even if they do all the right things, they may not be rewarded for it. And so our goal is very simple. Let's align and very clearly agree on a strategy. And then 2, let's make sure that if we execute appropriately on that strategy, folks are rewarded accordingly. And so I guess the mistake that we see is they're doing too many things, or they don't have a clear strategy. And even in a situation where they may, or certain folks have a clear view, they're not rewarded for that. And as we can all imagine, if you get to a spot where you're not rewarded over time, you're just incentivized to do things that create value. And obviously that's the antithesis of what we're trying to do, which is create as much value as possible for our investor group.
Absolutely. So you mentioned in the opening gambit, most of your team is based in Los Angeles. You guys have obviously, you've made the decision to expand the firm outside of the US and into Europe. What inspired that, firstly? And secondly, what are some of the lessons you've learned from operating on this side of the pond?
Yeah. For us, and it probably goes back to the point I just made, it's about focus. So at Pacific Avenue, we believe we're the best positioned to buy from unnatural owners. We think how we source deals is unique around that, how we execute those complex transactions. Then ultimately, what we say is how we prosecute them, which is what we do when we own them. And if that's our core, that's what we're good at. The question is where else do we go and how else do we do exactly what we're good at? Geography was the first on the list. And so Europe is something that we launched a little over a year ago. We'll talk about some of the positives there and some of the challenges. I think sticking with our core, there are some industries where we don't cover well today, which we'll continue to go after. and that'll allow us to stay exactly within who we are, unnatural owners, and use our capabilities. And then ultimately we'll move up and down the value chain, meaning we'll do bigger deals and we'll do smaller deals, but again, very consistent with who we are. So we chose Europe first because we thought it was the most close in adjacent. We can do the exact same type of transactions in the exact same industries with a very similar equity check size to what we've been doing. And so the way we started is it came down to people. Ultimately, we are in a people business. We think we've got a great strategy, but to execute on that strategy, you've got to have a very good team. And so we built around an excellent team. I think we're 8 or 9 folks now over in Europe. We'll continue to make some substantial additions so that we've got full scale over there. But that's the rationale. We believe the market, and it's proven true. About a third of our pipeline is in Europe. It's a robust opportunity for unnatural owners, and we think we can execute on it. So in terms of mistakes, I think for me, I'm an impatient person. My expectation was we could build it faster, and the team has done an outstanding job building a very high quality group of individuals. I would have loved to have done it in 6 months instead of 12. So I think allocating the right amount of time is important. We also have to make sure the Pacific Avenue culture, we believe, is unique to private equity. We're very collaborative, direct feedback. I wouldn't say it's a mistake, but we've worked very, very hard to ensure that there's overlap in culture. We're certainly sending core resources from LA over there to support the team. We've got effectively a program where we're interacting, obviously, multiple times a week with that team, and then we're seeing folks in lending, whether it's capital market resources, whether it's sourcing business development resources or execution resources, and we're seeing each other at least every other month in person. Sometimes here, sometimes over in Europe. So the biggest piece for us is it's like starting a business. When we start at Pacific Avenue, it takes longer than you want. It all comes down to people, and you have to be consistent around ensuring the culture and the strategy is maintained so that we have consistency across our offerings regardless of geography.
Perfect. And you mentioned that you had that kind of cultural, that kind of transportation of culture and moving that across, and that being really important. It's actually something when we do the reverse move and we go from Europe to the US, and that's something that we talk about. And we've probably got a plan where we're going to take 2 people over and base them in Florida to really build from our culture, because we believe that is also our unique offering in the most part. What did you guys do on that strategy? Did you take people from LA to Paris and have them as conment? Is there a person who's relocated out there personally? How did you start that momentum alongside obviously the stuff that you're doing now, as you mentioned?
Yeah, so for us, it came down to who was going to lead us in Europe, and we spent the better part of 18 months finding the right individual who had the experience that we needed, doing a lot of corporate divestitures and carve-outs, understood the relationship of working with a North American-based firm, and then was able to spend time with us here in the U.S. to get a better feel for our culture. Yep. We've had multiple, I'll call it mid and junior level folks who done rotations over there, anywhere from 2 months to 5 or 6 months. And ultimately, I would expect, and we're, as a growing firm, continuing to build our bench. I would expect we'll cross-pollinate at the VP and associate level, where they'll dedicate resources to us, 1 or 2, and we'll complementary do the same thing back to ensure that there's connectivity and overlap across the teams.
Makes sense. And what made you specifically choose Paris as a location amongst any other European country?
Yeah, so we have individuals. The head main office there is in Paris. We have folks in London as well as Switzerland. It's a pan-European strategy, but it ultimately came down to the individual who leads it was in Paris, and so we've got a group there. I would expect in the next 6 to 12 months we will have a core team as well in London. We've already have a resource there also, but Paris was just a result of the individuals that we hired and the team that we came across.
Makes sense. Makes sense. Get a first person, and they dictate where the pin goes in the map.
Exactly.
I understand that. Sorry to interrupt. Just a quick mention of our long-standing partnership with Grata. As you will probably know, the private equity scene is constantly evolving, and deal flow is moving now to proprietary and data-driven processes. Grata provides you with the data and information of over 7 million private companies. So if you're looking to improve your proprietary deal flow and improve the data access, then reach out to Grata today. Now back to the podcast. So on your website, you referenced earlier the kind of complex transactions, complex situations. Is that purely down, as you referenced, as unnatural owners? Or what exactly does that mean in a Pacific Avenue Capital framework?
What it means to us, the term unnatural owner is the right term, but what it means to us is that the individual or entity that owns the business no longer believes they should own it. Maybe they're being transitioned. They may not have children that want to run the business, and the current ownership or family knows that they need to divest it. So it's rooted in that desire that the seller is motivated to transact because ultimately they don't want to or can't own it anymore. The complexity comes because in many of those situations, there is an element of complexity. A forced sale because of the Department of Justice antitrust reasons comes with its own set of complexity. A founder-run business that may not come with a management team has a different set of complexity. So that's the complexity that we're seeking. We're big believers that if we can break that complexity down, and have the infrastructure to support it with our operations team, that allows us to be differentiated and capitalize on that complexity and ultimately create value out of it.
Okay. And obviously, given those types of investments, describe with us one example of one of the more challenging investments that you guys have turned around and turned into a big win.
Yeah. So we somewhat joke almost every deal at Pacific Avenue is a bad country song. It's got a long story around it, but maybe one that I'll reference is a bit of a cross ocean deal. Total Energy, obviously a large French energy major, was selling an asset. Very complex transaction. It didn't come with a management team at all. We had to hire over 50 individuals to stand up the business. It also had 3 distinct product lines. One of them that ultimately our view was not viable. Asian imports had wrecked that market, and even at the gross margin level, we couldn't be positive. And so inside of all of that, we also had to carve out a business. We had to build the sales team. We had to build the financial systems, and we had to build all the infrastructure to create an entity. That was a 12+ month journey that we went on in terms of building out the management team, building the back end infrastructure, and ultimately the front end infrastructure, all in process while we were restructuring parts of the business. Other parts of the business received heavy investment. The areas where we felt we had a differentiated advantage, and that's proven to be fruitful for us. And so that was, for us, very complex. Ultimately, it will be a very strong returner for us, but not one. It's one that, frankly, used the entire Pacific Avenue model. We sourced it in a unique way. The transaction, the execution of it, took over 12 months to get the deal done with Total, and some of the complexity that they have on the corporate side. And then, as I mentioned, the carve out itself and standing up the business was another 12 months. So these are not for the faint of heart, these types of transactions and the resources required. But if you get it right, we think the returns are certainly differentiated, and that is what our entire portfolio is made up of deals like that, where we're not distressed investors. We're not looking for underperforming businesses, but we're looking for businesses that haven't had the investment or the resource because they're non-core or non-strategic. And this was a good example. It was a very good business, some very good products, but didn't have the infrastructure or the resources to support it. If we could get that right, we could win. And we found that across our portfolio. There are diamonds in the rough that have been undermanaged or not managed because of different priorities. And if we can unlock that value, obviously it's great for our investors. It's great for the company. It's great for the team members at our company. They the term we use is we've liberated them to let them go. And then obviously we share in that upside value creation. It gets back to my incentive point earlier, and a large amount of wealth creation can be created for the entire team as well as our investors.
You mentioned the deal origination of that was unique. Was that a kind of a fortuitous outcome type unique, or was that something you did kind of invested in it?
Yeah.
You bed fruit?
Yeah, because we're the vast majority of what we do are corporate divestitures and carve-outs. We found it imperative. Direct relationship with corporate sellers is critical. Corporate divestitures, they may not go as broad in a sale process because they're either sensitive to it being made public. The diligence required is quite a bit more in times because of the carve out. And so they don't necessarily go out to 50 or 60 or 70 private equity firms or other potential buyers. They may only go out to 10. And the 10 that they choose is a direct function of who they have relationships with. And so we built a proprietary database. I believe it's up over 34, maybe 3,500 public and private companies where we're talking to multiple times a year so that they're aware who Pacific Avenue is when they ultimately divest something. And they're presented with a buyer's list from the investment bank. They're saying, yep, we know Pacific Avenue. Let's include them as one of 5 that gets the opportunity to play in this process. And that's critical to us because obviously if we're not in the process, we can't buy the business.
Of course. So you guys, obviously you founded a firm and you built the organization, taken in the right strategy, you've expanded into Europe and made kind of critical decisions. One of the decisions you have made is to build a large value creation team to focus on that, references on your website. What made you as the founder decide on that investment in that area outside of the kind of traditional deal team does everything model?
Yeah. Yeah, so I have a bit of a unique background for private equity. Out of undergrad, I worked in what's called transaction advisory group, really doing quality of earnings work and other M&A work, but from a technical accounting background. I did some restructuring after that and went to business school. And after business school, I went to Bain & Company on the operating side. And I helped build a practice that was focused on creating value in private equity firms' portfolio companies. And it was not a balance sheet driven exercise or capital structure driven exercise. It was purely income statement. How do we make this business more profitable? And many of the operational techniques that we learned and I developed at Bain alongside my partners and colleagues are the foundation of the playbook that we have at Pacific Avenue. And so we believe it's paramount to winning now and creating the most amount of value. Look, private equity is competitive. And so there's a lot of different levers that need to be pulled to maximize value. And you've got all sorts of firms. Some are buy and build and some are value investors and some are operationally focused. And there's a whole host of other levers. Our view is we're not good enough to just pick one. We need to have all of those. And the operations team allows us to create value across our portfolio. One of our key tenets is if you're an unnatural owner, oftentimes you're not allocating resources appropriately and you're underinvesting, and therefore the business is underperforming. And not distressed, but underperforming. And so having a playbook, having an operational team where we can standardize some of our outputs and value creation plans is paramount to our success. It's very hard to contemplate, do you make money on kind of your multiple expansion or do you make money on the EBITDA growth? our view is it's about 50-50 across our portfolio, depending on how you look at it. And so if we want to have outsized returns, we've got to have a real dedicated focus on the operations side. And it's paid dividends for us.
And how do you structure that operations value creation team? And when I mean that, I mean we see firms that do it from a private equity backed chief exec, CFO coming in. We see teams that go down the consulting route, obviously your history, but then we also see the specialist route of somebody who's a specialist from a CFO perspective and finance and operations and go to market. How are you guys structuring it?
Yeah, we've looked at them all. As I mentioned, I have an operating background. When I left Bain, I went to the operating group at another private equity firm. What we have ultimately decided is a couple of things. We believe that the most important value creation lever is the management team. Okay, so we're never going to run our businesses for our portfolio companies, and getting in place the right management team is critical. But we can support them in a number of ways. First and foremost, the carve-out is not a skill that all management teams have. And so supply chain person, you could have a pricing person. We don't, because we're cut across, we're looking for a deal type, the unnatural owner. We cut across a lot of different industries, and we have discomfort in, hey, even if we have a supply chain person, they may not be, if they're great in aerospace, they may not be great in something else industry that we're in. And so we've shied away from that. And what we hire is generalists who have great business acumen, who can partner and be a collaborator with the C-suite, and they can help determine the key value creation levers. And then the last piece for us of our value creation team or our operations team is we buy businesses sometimes without management teams. And so we need to have a group of folks that can step in the interim and keep the trains running. They may not be the perfect CEO, but they can absolutely keep things moving forward. And so our ops team, carve-out focused, value creation focused from a generalist perspective, partnering with management, and then in the need where we don't get a management team with the sale. Our belief is those cut across industries pretty cleanly. The areas that are higher up on the P&L and on the revenue side or on the cost of goods sold side, we don't believe adding that specific infrastructure makes sense today at our scale. That may evolve as obviously we get bigger and build depth around certain sectors.
Yes. What do you read, watch, listen to? Do you recommend that others check out, please, Chris?
Yeah, I'm a pretty boring guy. I almost watch no TV other than live sports. I couldn't tell you the last streaming show I watched. In terms of reading, I am a pretty focused on a couple of different areas. First and foremost, in and around China, the economy, the government there, and how it functions and operates. And so if I'm laying in bed then I go to bed pretty early, but at 9 or 9:30 at night, that's our website's pretty robust. You can get a full link to my email and my contact information. But just email me. I get a significant amount of general outreach. I do my best to get back to as many folks as possible. But obviously, if it's a deal or if it's just career advice or anything else, happy to give my 2 cents in what I've learned as I build Pacific Avenue.
Perfect. Well, thank you very much for coming on to the Private Equity Podcast and sharing everything you have done, Chris.
Yeah, thank you, Alex. Appreciate the time.
And as always, thank you very much to all our listeners. Till the next time, keep smashing it, and thank you for listening.